And welcome to Coverage and Coffee with Jason Bidish from Barr's Insurance. How are you this week, Jason?
Good, Luke. How are you doing today?
Wonderful,
Good.
thank you. Today's topic is...
homeowners coverage.
Ooh, this is a good topic.
Oh, very interesting stuff, Luke. What I want to go over today with everybody is looking at your homeowner's policy and knowing what you're covered, what is covered, and what you're covered for, and some information about why sometimes your house is covered for more than you think it should be.
Ooh, very good.
Exciting stuff. So let's go over your homeowner's policy first. I know you probably have it sitting right beside you. It's probably good reading material, a lot of page-turning stuff. But let's go over what the policy covers.
Okay.
And first off, coverage A. Okay, so when you look at your policy, coverage A means what your house is covered for, what amount it is. And we're going to talk about that in a little bit, where we get that number from. Okay? Coverage B is actually called other structures, but that's like your shed, a doghouse, a gazebo, things like that, garages, detached garages, things like that.
By the way, that doghouse, very important that thing doesn't leak, so when the wife or the girlfriend yells at you...
Absolutely. You do not want to be sleeping in a leaky dog shed.
Right.
Coverage C is called personal property, but really it's just covering all your stuff, all your belongings on your property. So even if it's in the doghouse that you have to sleep in every so often,
yes,
you have coverage for that on your property as well. Coverage D, a place to stay. Okay, coverage D is actually called loss of use. What that means is if you cannot physically live in your house, maybe it doesn't have a roof on it, maybe it caught fire and part of the house is exposed to the elements and you can't live there, this pays for you to stay somewhere else on a reimbursement level. They're not going to hand you a check for $10,000+ to stay at the Ritz-Carlton while they build a new house for you. So if you stay at like the Comfort Inn, let's say down the street, you pay for it for a week, they hand you a check for you staying there for a week.
Oh, wow.
Okay? Now, everything above there has a deductible attached to it. Okay? Now, normally people go with the $250 or the $500 deductible. Some people even get the $100 deductible because they don't want to pay out a lot. Sometimes they say, well, I'm paying the premium the insurance company should pay. But you have to keep something in mind. The lower this deductible is, the higher your premium is going to be. So if you don't want to meet the insurance company in the middle on, let's say, a $70-some thousand claim, well, you're going to get charged a little more. So it gets cheaper on your premium the higher your deductible goes. And there's actually even bigger benefits for some companies at the $2,500 deductible level.
Oh, really?
Yeah. Yeah, it's, again, if you're going to meet in the middle and take a little bit of a hit along with the insurance company, they're going to reward you for it, so to speak. Okay. Now, the other two coverages on your policy are liability. Now, when you think of the word liability, just think, where did I screw up? Okay? Or where were you negligent at? So that could mean, did you forget to salt the sidewalk and now somebody slipped and fell and broke their leg? Maybe you had a contractor over to fix part of your siding and you forgot to tell them about the small hole in their yard. They put the ladder up to fix the vinyl siding and they tip over. You're actually negligent for that.
Really?
Yep, maybe even a staircase that is a little wobbly and somebody steps on it and goes through and messes up their leg. That's on you. Okay? Now, MedPay, though, that is where somebody gets hurt on your property and it's not your fault. It's more of an act of God. So let's say, I invited you over to my house to, saw some 2x4s to help me build a porch. Okay? Now, while you're sawing it, you cut your finger. Okay? Well, that's not really my fault that you cut your finger. And accidents happen. I like to sometimes call this please don't sue me money. Just run to the hospital, get yourself stitched up and cleaned up, and then, give me the bill, and then whatever limit your agent gave you on the MedPay, that's what it'll cover up to. Sometimes that's $1,000, $2,000, $3,000, $4,000, or $5,000 limits. Okay. Now, what's nice about MedPay is if you're ever looking around for other insurance or you're shopping around, MedPay claims normally don't affect you like a liability claim would because the liability was your fault. The MedPay really wasn't your fault. In another case about MedPay, do you remember back in around, I think it was 2006 when that family got together for a big family family reunion in Franklin and lightning struck a
Oh,
couple
yeah.
people. Remember
Yeah.
that? Same thing.
Okay.
It's absolutely the same thing. You were on somebody's property, they got hurt, had to go to the hospital. That's where this comes into play. Now, something else I wanted to talk to you about, Luke. Whenever you look at your insurance policy, do you notice that your coverage A can sometimes be way out of whack in your eyes?
Yes.
Okay. Now, we don't just pick numbers out of the air and hope for the best. Okay. What we do is we do replacement cost estimators. Okay. Now, when you bought the house, you bought it from a real estate agent. When you get the policy, you get it from an insurance agent. Real estate agents are market value. Insurance agents are replacement cost. If the house burns down, what is it going to cost to build it back up again? Okay, does that make sense to you?
Correct me here if I'm wrong here. A lot of homes in the oil region are almost, you can't put a value on some of the homes. The craftsmanship, the woodwork. If you were to have that done today, the cost to have that done would be pretty high, correct?
It would be astronomical today.
So when you get that quote from your insurance guy, or you, hopefully you, to replace, let's say, a home around here that burnt down that had that quality, that's going to cost some money to replace.
Like intricate woodwork around
Yes.
a fireplace. Actually, sometimes if it comes to situations like that, insurance companies will go for like, kind, and quality. Okay, so a lot of houses where they have the lath and plaster, okay, they're going to put drywall up. They're not going to waste time going and looking for, horsehair plaster. They're going to do like, kind, and quality. A lot of that intricate stuff,
Right.
unless that's a conversation you would have to have with your claims adjuster.
But some of that, the newer stuff, is going to cost a little bit more, correct?
It can cost a little bit more, yes. And that's where you work with the claims adjuster to discuss that. But based off of what your house is worth at the time of loss is what this number should be.
Gotcha.
So even though it's out of whack, it looks to you like you're out of whack because maybe you bought your house for $70,000. I may be insuring it for $250,000. So let's talk about how we get that number. Okay. Now, when we do replacement costs, we just use this computer program called Replacement Cost Technology, and what we do is we put in specific information about your house. Okay. The coverage or the value of the house is based off of the year that it was built, the square footage, the type of siding it has, the type of roof that it has. Does it have a fireplace? Does it have a basement? If it has a basement, is the basement finished? And a lot of people think that just because their basement's actually finished and fully under their house means it's a finished basement. What a finished basement is there drywall, carpeting, or rooms set up in the basement. That's what a finished basement is. And a finished basement actually raises the value of your house.
Oh.
So the bigger the house is, the more it's going to cost you on insurance.
Now, mortgage companies, if you're looking to purchase a home, sometimes they'll have some stipulations where they want X amount coverage or so forth?
Yes, some financial institutions only care about the loan amount, okay? Now, if they force place insurance on you, like you don't want to get your own insurance, you'd rather just have the bank place it. One, it's going to be astronomical. Two, it's only going to cover the value of the home. Your personal property isn't covered. You're probably not even going to have liability.
Wow.
But some banks are moving into, they want full replacement value on the house.
Very cool.
Yes. So let's talk one more quick thing.
Okay.
And that is, what if you don't insure your house for the full replacement cost? Now, in insurance classes, they teach us this nerdy little equation called did over should times the loss minus your deductible, okay? So let's say you did insure your house for $100,000 to save money, but you should have insured it for $200,000 times your loss. So some easy math here, which I was horrible at in college, but somehow still passed, times, let's say you have a $20,000 roof claim. Big windstorm, we're used to that in the area. Big windstorm comes in and blows your roof off. You have a $20,000 loss. Well, if you insured it for $200,000, and you should have insured it for $200,000, minus whatever your deductible is, and that's what you're going to get. you're going to get, in this case, $19,500 because 200,000 over 200,000 is 1 times the $20,000 loss minus your $500 deductible. Okay, but in this case, though, with 100,000, because you want to try to save money, okay, instead you would get a check on a $20,000 claim. You would get a check of $9,500 because you wanted to save a little bit of dough in the beginning.
Ooh.
And your foot up my butt, which I really, really don't want.
Yeah, that's not comfortable, is it?
It's not. It's not. I've had a few. But those are things you got to look for on your policy. And again, always review your policies, your home policy, your auto policy, just to make sure, one, you understand the coverages, and two, make sure you're paying a fair price too.
Jason, if somebody wants to call you up, sit down with you, and go over their policy, how can they get a hold of you?
Oh, just give me a call. I'm right down the street in the Park Building. My number is 827-7767.
All right. Coverage and Coffee with Jason Bidish from Barr's Insurance. Jason, we'll see you next week, buddy.
See you next week, Luke.